Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Ryan Sullivan. Ryan is head of US ETF services at Brown Brothers Harriman. Ryan, it is so great to see you. Thank you so much for joining me today.
Judy, it's great to be back down here in Florida. Great to see you too.
Thank you. Okay, so Ryan, this was the 9th annual Global ETF Investor Survey from BBH. What, in your view, were the biggest surprises this year?
There's always a couple in 9 years of doing this. We always are excited to figure out what will be the biggest surprises for us. And I think there's probably three things here to touch on. One is the popularity, two is the innovation going on in the space, and three is the importance of liquidity that emerged from the findings this year. I think from a popularity standpoint, in 9 years of doing the survey, we've never seen as high a response rate as we saw this year in terms of planned increased allocations to ETFs. 84% of our respondents said they plan to add to their allocations in 2022. That's the highest we've seen in 9 years. So here we are coming off of 2021, record-shattering flows for the products globally, potentially signaling that we might see something similar in 2022, even with the current volatile markets that we've seen, through the first quarter. I think on the innovation front, we see quick investor adoption of thematic, of defined outcome, of semi-transparent products, or at least demand to bring in semi-transparent products. We'll talk about that in a minute. But I think that theme of innovation is an important takeaway here. Quick investor adoption or interest in these newer strategies and structures in the ETF space. And then finally, liquidity. This is the first time in our survey's history in 9 years that we've seen liquidity emerge as a top 3 consideration in all markets. We survey investors in the US, in Europe, and in Greater China. Liquidity, trading volume, depth of the market was a top 3 consideration for investors in all of those regions.
All right, so what do you believe the survey highlight for products that ETF managers should be aware of?
There's a couple things here, and I kind of go back to that innovation comment earlier, right? I think structurally within the wrapper, we saw the semi-transparent revolution kind of take hold and these products begin to come to market the last 2 years, many now surpassing a 2-year track record. We're still seeing due diligence efforts by the intermediaries in the US space, but I think those will come to a close here for these earlier products, and we'll start to see wider acceptance of them on these platforms, potentially driving more investor usage. 50% of our investors said they plan to add semi-transparent products to their portfolios in the US, so I think that's a promising feature here of adopting that structural innovation going on in the wrapper. I think within the strategy side, we saw thematic ETF interest continue to grow. That looks like it might have some staying power. About 40% of our respondents said they plan to add to about 10% of their portfolio allocation to thematic ETFs. That's an important, I think, measurement there that these products are viable over multiple market cycles, again, kind of bringing those mega trends and secular changes into the portfolio. So I think some promising findings there in terms of innovation and how quickly investors might adopt it.
All right, and finally, Ryan, what do you believe the survey shows about model usage and trends?
This, I think, is something that continues to evolve year on year. This notion of advisors and other investors looking to bring more tools into how they create their own portfolios. Whether they build it from the bottom up, or do they bring in a model from a third party or a potential ETF issuer to help in that asset allocation and bring in certain aspects of the asset classes and how they offer that exposure to their end clients. ETFs are really the backbone DNA of those models, and I think increasingly we see about 60% of our investors this year, just to touch under 60%, are using models either from the ETF issuers themselves, from their own home office, or from another third party that offers them. I think we'll continue to see that grow in the coming years, and that'll be a big tailwind for the ETF industry as well.
All right, Ryan, thank you so much for joining me. And that's ETF Leaders, powered by the New York Stock Exchange.